2023, China's national economy continued to recover steadily, and the stock market showed strong resilience. The A-share market performed well in the first half of the year, with major stock indices achieving double-digit gains. In the second half of the year, the stock market became more volatile but still moved forward amidst fluctuations. With the recent introduction of various macroeconomic policies in China, what are some promising performance that the Chinese market will have in 2024? What advice can be given to investors? Let's enjoy today's show.
The property market, we think, starts to stabilize in the first half of this year. So the property market is the most important factor in a forecast that we're nervous about, right? On the one hand, we look at all the announcements, and an enormous number of stimulus measures by number has been announced since the summer. It's not yet obvious that that's fully turned the ship, right? So when we look at the monthly data on property activity, 1 month is up, 1 month is down. There's no clear sort of pattern yet or troughing in the data. We think we're getting very close to that, so we're becoming optimistic, but that is the single most important thing, because it has all kinds of spillover effects. So that's the thing we're most focused on. Well, so the bit that we're most excited about in terms of our outlook when we look at the equity market is really the tech sector, right? So the tech sector is now historically cheap compared to the rest of emerging markets, and certainly compared to developed markets. And what's interesting when you look at the earnings trends in that sector, they've actually been improving, right? So despite the weakness that people see maybe in the economy as a whole or property, there are pockets of China that actually look very, very resilient. And the tech sector is the one that looks most resilient. So we like sort of North Asia tech as an industry, but within that, we particularly like China internet stocks. Well, so the main thing we've been recommending from a trading perspective is just to remain exposed to fixed income, although I think the market's taking a breather here because it rallied so fast in the fourth quarter. But that remains sort of the asset class that should be most safe, right? We also think that the correlation between bond and equities is going to turn back around to where it's been historically. We're much more defensive and cautious on equity. We're generally neutral globally on things like tech. We're also a bit cautious on credit because the credit spreads are so compressed that we just want to see where growth goes this year, and then I think you can start to go back into credit and equity and things like that. That's I think the biggest sort of the big picture recommendation. But it's very difficult to be very overweight cash, right? As we saw last year. So we've been cautious for a while, but if you weren't invested in the second half of last year, or let's say the last 3 months of last year, you would have severely underperformed the market. So it's very difficult for a lot of our clients to be too overweight cash, right? Because the market has a tendency of grinding higher, and you don't want to necessarily miss that. So what you actually tend to find speaking to clients is that, and that's actually what our equity analysts are forecasting, is that we think the market could continue to go up until it becomes much more clear that there's going to be a recession. And at that point, everyone's going to try to get out through the same exit door at the same time, right? Everyone wants to be overweight cash at that point, which is sort of why you get the big drawdown, because you get too many sellers at the same time. But you don't necessarily want to be overweight cash now, right? I think it's too early to be certain that we're going to get that recession. But certainly there's a role for being somewhat overweight cash at some stage this year, and it has a role in your portfolio.
So again, you need to be careful here because we're talking 7 stocks that did really well, that drove the performance of the U.S. stock market. But if you look broader in technology, actually there were a lot of layoffs in technology. So just because the stock market for certain stocks are going up doesn't mean that that goes into GDP directly. So again, if you look at the consumer was strong mainly because of the pent-up demand and the government programs. Investment was flat or negative. But more generally, the U.S. again is in a very good position because once again, in terms of technological innovations, they're the leader. And there's no dispute on this. So if you think about the innovations that are happening in terms of artificial intelligence or decentralized finance, this is the U.S. is well positioned to take advantage of those disruptions, and they are significant disruptions. Now, it might not go as planned, and one of the issues that could be a constraint is onerous regulatory environment that slows down these innovations or leads some of these companies to move offshore. So I think your point is that given the performance of certain technology stocks, that puts the U.S. in a good position, and I agree with that.
I have some ideas. They're probably not good ones. So I think one thing, it's kind of the U.S. is helping the Chinese chip industry because of these restrictions. So it's just no question. If we put these subsidies and restrictions on chips anywhere else, the other countries are going to, I think it's really foolish. And U.S. chip manufacturers think it's foolish. What's going to happen is it's going to subsidize, it's going to incentivize, promote R&D and chips in other places. China's one of them. Other places too. China is especially interesting because it has lots of good engineers. And it's got companies that, entrepreneurs who know how to organize engineers. So 10 years from now, you ask me about chips, all the chips in my thing are to be made in China. They'll probably be pretty good too.
我觉得对市场来说，那流动性的供给增加呢，对于市场肯定是一个利好啊。不仅对于股票市场，对于债券市场啊，那么流动性供给都会增加。那么总体上来看的话呢，短端利率运行是非常平稳的，一个比较平稳和这个比较这个适度的这个流动性环境呢，是有助于整个市场的运行的。年初以来，这个债券利率下行的这个幅度还是比较明显啊，这个。几方面原因吧，就一个呢，这个央行刚才我们也提到这个降准投放了大量的流动性那么因为我们知道从去年8月份以来整个政策利率LPR 利率也有很久没有调整了那么所以市场认为2月份还有降息的可能所以就是整个货币宽松的预期还是比较强。我们看到这个近期公布的像这个1月份的 PMI 包括呢可能即将公布的信贷数据通胀数据可能总体来看呢，经济还是在一个弱复苏可能还是在一个磨底的阶段所以在这个时候呢大家也认为有必要进一步的去降低实际利率我觉得第三个呢，我们知道对于债券来说呢，大家一般都是早配置早收益所以一般呢像大的机构投资者像保险银行也都倾向于选择在年初配置所以以上3个原因的共同作用就导致了这个年初以来这个债券市场表现还是比较好的。我觉得这个龙年肯定这个会比去年更好几个原因吧一个呢从海外来看，那么我们知道去年呢由于海外高通胀货币紧缩实际上呢对于全球的资本市场特别是新兴国家的这个资本市场都形成了比较大的压力那么年初以来呢，我们看到这个美联储降息的预期在不断增强所以这个龙年一个大的外部环境呢肯定是会比去年好。那么从内部来看的话呢，从去年8、9月份以来这个很多政策出台财政、房地产、投资政策这个包括这个近期像这个央行释放的 PSL 的这个投放是吧？去年财政部发行的1万亿特别国债，那么虽然发行在去年那么大部分使用会在今年而且呢还有地方的这个特殊再融资债的发行那么去年发了1万多亿所以这些政策呢，我觉得它的这个效果可能都会逐步体现在今年吧。而且呢，大家也预计和期待就是在今年春节回来3月初的两会上，那么中央呢会拿出更多的这个更加积极的政策去支持整个经济的增长和复苏。所以呢，我觉得从内部来看呢，这个应该说乐观的因素呢也在逐步的积聚。